and a small business owner. So, welcome to today's episode of Sonia Davar Live Show, where we will be discussing all the changes that have happened in Budget 2021 and how it will impact you as a freelancer or small business owner. And if you don't know me, my name is Sonia Davar. I'm a business finance coach and a chartered accountant. All the links that we will be discussing in today's live show will be there in the description below. So if you're watching me live on YouTube, check out the description below this video, or if you're watching me live on my Facebook page or Facebook group, then watch the description which is on top of the video where you're watching it, and do pay attention to all the links that we've shared with you in the description of this video. With this, let's get started. So our today's topic for discussion is Budget 2021 changes for freelancers and small business owners. And the first point that we have to discuss with you all are the changes that has been announced in the way we do business. So the way we do business define the structure of our business. There can be different structures. You can do your business or freelancing work as a sole proprietor. You can do it as a one-person company if you are a solopreneur running your business. One-person company is basically a private limited company which is branched out as OPC, where you have only one person as the director and shareholder. So that is another structure. Other structures could be partnership firms, LLPs, and private limited company. So first, we will be discussing three major changes that have happened in the business structure that has made the life of small business owners much simpler and easier to do the business in India. So the first change in this line is the change in the definition of small companies. If you remember, in mid of 2020, amongst the pandemic crisis and the resolution of by the government to cope with the pandemic, they have relaxed the norms and changed the definition of MSME. So now a medium or medium enterprise prices is defined as any company, not just a company, any business up to a turnover of 200 crores, which was much lower in the previous definition. And in line with the definition of MSME, this budget 2021 has also changed the definition of small companies. The small companies definition is as per the Companies Act. So it applies to any company, whether it is an OPC, whether it is a public company or a private company. If the company defines the threshold that is mentioned in the small company definition, then you get further relaxations from various compliances that has been laid out in Companies Act. So the definition which was earlier has been relaxed, and now you have the definition which says that a small company is up to 10 crores of turnover, which was earlier up to 1 crore of turnover. So any company which had a turnover of up to 2 crores, a paid up share capital of 2 crores or turnover of up to 10 crores is now a small company. I'll repeat myself. A small company which has a paid up share capital of 1 crore, which was earlier 50 lakh rupees, and a turnover of rupees 20 crores, which was earlier 2 crore rupees. So there's a high jump from 2 crores from 2 crores to 20 crores now. So a lot of companies, and it is estimated that approximately 200,000, that's 2 lakh companies will get now under the definition of new small company. So it will definitely get benefit to so many enterprises and so many businesses. So if you had a company where your turnover earlier was more than 2 crore rupees, but below 20 crore rupees, then it's most likely that your company will also come under the definition of small company. What are the benefits of small company? And if you'd like to know more about what a small company is and what benefits do they have, then do drop in a comment below and let us know if you want us to create more content around what is a small company and what are the benefits. I will quickly share with you some of the benefits or relaxations that a small company get in Companies Act. Is relaxation with compliances. So a small company do not have to comply with rotation of auditors or having the minimum board meetings in place. So definitely it does give a lot of relaxation in running your day-to-day operation, and hence it increases the ease of doing business in India. So it's a very welcome move of expanding the definition of small company. Going by the same route of discussing the way we do business, as in the business structure, there has also been a change in the definition of one person company. And as I've mentioned earlier, that a company can be classified as one person, a private limited company, or a public limited company. So a one person company definition earlier used to be if the paid up share capital of the company was 50 lakhs, or um, so earlier in the earlier definition, the OPC had to compulsory convert into a private limited company if any of these two criteria matches. That is, if your paid up share capital increases beyond 50 lakh rupees, or if your turnover, average turnover of the last 3 financial years increases 2 crore rupees, then you had to compulsory convert it into a private limited company. Now, this was actually a big hurdle in the growth of a one person company. And once you cross 2 crore rupees turnover consistently for 3 years, then you had to compulsory convert it into a private limited company. And hence, a lot of solopreneurs who wanted to run their business have to either decide whether they want to do business with their parents being the directors, and they were not really keen on adding anybody else apart from themselves, because they were taking a risk with their business. They don't want to add in more people into the business, be it their parents or anybody else from the family, to include them as the directors or shareholders. So this definition of one person company expansion becomes makes life of solopreneur much easier, simpler, and the growth of one person company, which can be like, now there is no turnover limit as such, and there is no conversion required into a private limited company. So this definition or the conversion limit has been done away with an option that they can, if they want to, convert into a public limited or private limited at any point in time with as per their wish. So again, it's a very welcome move, and I would highly recommend every freelancer or solopreneur who's running their business in their personal name. If you are taking on any liability in the business, it's always better to limit your liability, and one person company gives you that option that you can still run your business as a solopreneur and also get the limited liability for the business. So your personal assets and personal your personal assets will not be touched if you have any business liability. So it's always better to limit your liabilities, and one person company helps you to do that. And it definitely would encourage a lot of organization, like conversion from the unorganized sector into the organized sector. So again, a very welcome move of ease of doing business in India, and the way to do things properly while you're running your business single. Another big change in the structure of business is that decriminalization of a lot of offenses in LLP as well. So in the past, government has decriminalized a lot of offenses under the Companies Act, but the same was not being done for LLP. So if for some reason you were a partner in an LLP and you forgot to file, you've incorporated an LLP and you had not been doing any business, and hence you have not filed any return, annual return or other various MCA compliances returns that are required to be filed on a yearly basis with by an LLP, you have not done those compliances, then the provisions of LLP were such that you would be the offense was a criminal offense, and you would have gotten an imprisonment for that offense as well. So it was also one of the factors that not many people were kind of also considering LLP also as an option. And with this change, it is I mean, if you are running a partnership firm, think again if conversion into an LLP makes more sense, because again you are limiting your liability. It is an organized structure of running your business, and now they have also decriminalized the offenses under the LLP Act, so you don't even have the threat that you might land up in jail if you don't file any particular form for your LLP. So it's a very welcome move in this budget 2021 that has happened. So these were the three main changes that have happened which had impacted the way we do business and the business structure. And now let's see what are the changes as compared to the with respect to the audit compliances. So there has been some relaxations even in those areas as well. So the fourth point that I would like to discuss now is that the tax audit limit has been increased. Now the limit for tax audit are like a little complicated, and let me know in the comments below if you want us to also explain you what are the different limits of tax audit if you are an individual, or if you are working as a partnership firm or a company. But under section 44AB, the limit of tax audit is 1 crore rupees. Last year there has been a relaxation for businesses who primarily deal in digital transaction, that is either they are banking through ECS or NEFT, or they are taking payments via any of the UPI payment methods. So if you are transacting in your business, both receipts and payments, up to 95% of those transactions are in digital format, then last year this limit was increased to 5 crore rupees, and this year this limit has been further increased to 10 crore rupees of turnover. So any business up to 10 crore rupees of turnover, if they are having 95% of their transactions in of their cash receipts and of their total cash receipts and total cash payments in digital format, then they don't have to get the tax audit done. Again, as a business owner, you get a lot of relaxations if even if you don't have to file a tax audit report, because in tax audit you actually give a lot more detail in very detailed format to the income tax department. So this is also a very relaxed provision that they have introduced for businesses who are doing their business digitally. Another relaxation that has been given to many businesses are that GST audit will not be applicable from FY 2021. So, if you all are running a business where GST audit is applicable to you for FY 1920, any business with having a GST turnover and who have crossed their turnover, who have the turnover of more than 5 crore rupees, have to get the GST audit done for FY 1920, and the due date for that GST audit is February 28 of this year, that is February 28, 2021. But from FY 2021, this GST audit requirement has been done away with. So you can actually sit back and relax. There is still, as a business owner, you have to file your annual return. You also have to file one form as a self-assessed form, that you have assessed the liability and you are certifying that there is no additional liabilities. So the certification from a chartered accountant is not required anymore, but the same work is required to be done by the business owners, and you have to file some other form apart from your annual return instead of GST audit. So let's now, those were the two limits for audits. Now we will first discuss some changes in Income Tax Act, and then we will discuss some changes in GST Act, which you all need to know. So for Income Tax Act, if you don't file your return on time, or if you need to revise your return after you filed it, there was the time limit to do this was up till 31st March of the year, after the year for which you need to file the return. So I'll give you an example. We all have just filed our returns for FY 1920, or if you are a company, you might be in the process of filing because the due date is 15th of February. So for FY 1920, if you didn't file the return before the due date, you have the option to still file it as a belated return up to 31st of March with some penalties. So with this change in the budget 2021, the limit has been reduced by 3 months. So now if October, every year October is generally the deadline for businesses who have to file their ITRs, or September is the deadline for ITRs, then you get only time till December to revise that ITR or to file a belated ITR. So this 3-month time limit has been reduced from the revised period timeline or belated return timeline, and similarly 3 months have been reduced from the time that has been given to income tax officers to complete the assessments. So they also will have to complete their assessments by 31st of December of next year after you file your return. So that was point number 6 of the changes that has been introduced in the budget. Seventh number is for business owners who have some cases outstanding either with CIT appeals or ITAT. So government has already announced, and it is in effect, the faceless assessment process with ITO and CIT appeals. This budget 2021 has also proposed a faceless assessment or a faceless appeal method with a higher authority, that is ITAT, and there will also be some online assessment facilities at the higher courts as well. For now, it is faceless assessment for ITAT, and they have also introduced for small dispute matters where your total income does not exceed beyond 50 lakh rupees, or the tax dispute does not exceed beyond 10 lakh rupees, to set up a dispute resolution committee where you can really resolve the disputes much faster. And again, this DRC committee also will work completely online. So this entire process will be completely online, and you don't even have to meet your officer or tax officer or your commissioner to resolve the cases, and it will be completely online process. The eighth point is that as a business owner, now you have to deduct higher TDS for if you are hiring a lot of freelancers or individuals who do not file their income tax return, and you've been consistently hiring such people for last 2 or 3 years, then then you have to start deducting TDS at a higher rate. The higher rate would be double the rate of the actual TDS provision, or 5%, whichever is higher. To give you an example, if you hire a contractor, so the TDS rate for a contractor is 1%. And if that contractor has not filed his ITR for last 2 years, and you have TDS that you have deducted for last 2 years of more than 50,000 rupees, then for FY 21-22, you will have to deduct TDS at double the rate of 1%, that's 2%, or 5%, whichever is higher, that is 5%, and you will need to deduct their TDS for FY 21-22 at 5% TDS. I hope my example makes the uh, the provision clear. It is not applicable on salary, but it is applicable on all the other sections apart from salary. There are some more um, exceptions, but I'm not covering there because those exceptions are not related to freelancers or small business owners. So definitely, I mean, you need to make sure that the payments that you are making, all those people are filing the return, and that could be one of the document that you also have to start collecting at the time of vendor onboarding from next year. Now, let's have some GST updates. I'm only covering the major ones here. And one major GST update we have already discussed was that you don't have to get the GST audit done anymore. The next or the ninth point that we want to discuss is on the ITC availment. So, this budget has proposed that you cannot take the ITC if the credit is not shown in your GSTR 2B ledger. That means if your if you are vendor, so you will take ITC on the expenses that you have paid. So if you're buying any goods or taking any services from your vendor, who in turn is not paying the taxes, or who has not filed their GST return, and hence the credit is not shown in your GST ledger, you cannot take that credit anymore. Last year, the government had reduced the GST credit that you could take from 20% to 10% to 5%, but now they have completely done away with such cases. So if it is upon you that you only onboard such vendors who are compliant and who file their GST return on time, so that you can take those GST credits and do not have to wait upon it. This is also one of the point that you might want to consider before you pay off your vendors, that ensure that you have those GST credits seen in the GST ledger, that's your credit ledger online with the GST system. You want to make sure that your credit is seen before you even pay your vendors. Now, the 10th point that we want to cover is there was already a provision being made earlier that, and it is a retrospective amendment, that interest is payable on net liability basis. So when the GST laws was actually drafted, the wording was such that even if you have a liability, and if you have any credit available in your ledger, or cash also available in your ledger, then also the interest on the output liability will be computed on gross basis. uh, GST law have not allowed the credits to be utilized towards those liabilities, and you had to pay interest at for 24% on any liability that may come up in future in your assessments or otherwise. But Budget 2021 have brought in this amendment from retrospective. That's from the time that GST law has been put in force, and now if even if you get any future GST liability, that liability will be set off first with any cash balance that you have in your GST ledger, or any credit balance that is available in your online GST credit ledger. Adjust with that, and whatever liability remains, you have to pay interest only on that net liability. So I hope this also is actually one of the provisions that will make lives of business owners much better. So I think apart from the ninth point, I don't see that there is any negative changes that this budget has brought. Most of the changes, that 90% of what we've discussed, have actually either provided ease in the way we do business, or have relaxed the compliance norms to a great extent to help freelancers and business owners if you're running the business. If we just do a recap, we discussed 10 points. First 3 points were actually what we discussed towards the business structure. Fourth and fifth point was relaxation in audit requirements. Sixth point was online appeal even at a higher authority level. Um, yeah, sixth point was like the timeline for revised return has been reduced. Now you cannot file a revised return or a belated return up till 31st of March, or online ITAT appeal. Higher TDS that you need to deduct for non-filers, and ITC availment only after you see the credit in your GST ledger, and interest on net liability in case of GST. So with this, I hope you have got um, all the information that you needed for your business, which has been announced in Budget 2021. And if you like today's episode, don't forget to hit the like and subscribe button, and we will be sharing with you a lot of content in future which will help you how to run your business. And we will not only be covering things about taxes, we would also be covering things about finances and systems and processes that you need to have to grow your business. And comment below what were the most highlights that will impact your business with the changes that has been announced in Budget 2021, and have the conversation going. So yeah, that's about it from my end for today. Do hit the notification bell so that you can get all the updates of future episode releases in future, and I will see you next times. Thank you. Bye bye.